Coming up on Market to Market, global emissions and temperatures climb again. Cracking open a wild North American market.
In 2018.
And commodity market analysis with Elaine Kub next.
So absolutely, these markets will move together.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
This is the Friday, November 29 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Black Friday originated as the first day retailers broke even for the year. Now this family tradition helps drive our entire economy. Prior to the holiday shopping sprint to Christmas, consumers were already in a festive mood as spending was up 0.3% in October. U.S. factories were feeling the spirit as orders for big-ticket items increased on a surge in demand for military aircraft. Deere & Company posted a $3.25 billion net income for the year, despite a slower fourth quarter. The agricultural manufacturing giant issued a weak outlook for 2020 based on U.S. and China trade concerns. Sales of new homes dipped slightly last month, even with lower mortgage rates. Getting to that new house was a challenge this Thanksgiving week because of the weather. Several systems altered travel plans, even cutting power to more than 100,000 people across the country. The weather is usually a benign conversation starter, but mentioning climate change will likely disrupt the pleasantries. This week, the United Nations released a report citing emission numbers are rising, and so too is the temperature around the world. Peter Tubbs has more on the latest findings.
3 of the main heat-trapping gases emitted into the atmosphere again hit a high, according to the World Meteorological Organization's latest report. The WMO gas bulletin said levels of carbon dioxide, methane, and nitrous oxide have risen 43% since 1990. The group said the world's work on reducing carbon emissions are proceeding too slowly to prevent large shifts in the world's climate. The report detailed global greenhouse gas emissions have increased 1.5% in each of the last 10 years, with little sign of abatement on the horizon. Each year of increases means steeper cuts will be needed in the future to reduce the amount of greenhouse gases in the atmosphere later in the century.
We have again broken records in carbon dioxide concentrations, and we have already exceeded 400 ppm level, which was regarded as a critical level. That happened already 2 years ago, and this growth of carbon dioxide concentration continues, and last year's increase was about the same as we have been observing during the past 10 years as an average.
The energy sector is the primary source of global greenhouse gas emissions, and a transition to renewable energy has the largest potential for reducing those emissions.
At the moment, we produce 85% of the global energy based on fossil ones, coal, oil, and gas, which are shown here, and only 15% based on nuclear, hydro, and renewables. And to be successful in implementation of the Paris Agreement, we should revert those numbers in the coming decades.
Then U.S. Secretary of State John Kerry signed the Paris Agreement in 2016 on behalf of the United States.
The United States will withdraw from the Paris Climate Accord.
Early in his administration, President Trump announced the U.S. would be pulling out of the voluntary pact. This month, the White House began the formal process to leave the agreement aimed at reducing the collective emission of greenhouse gases and limiting the rise in global temperatures to 2.7 degrees Fahrenheit compared to pre-industrial times. The agreement carries no enforcement mechanism. Reaching a less ambitious target of a 3.6-degree rise would require an annual reduction of emissions of 2.7% each year between 2020 and 2030, according to the WMO. Current estimates see a climate almost 6 degrees warmer in 2100 than the 19th century world average, with dramatic consequences for life on Earth.
Governments nowadays understand that this is a challenge, and what is good news is that the visibility of these issues is highest ever, and the good news is also that the private sector is more and more interested in finding solutions.
From Market to Market, I'm Peter Tubbs.
The Norman Rockwell imagery of fall included leaves, pumpkins, and hunting. For many of you, your autumn ritual likely encompassed picking up walnuts from the yard before the squirrels did. The wild American walnut is native to more than half of the country and an economic opportunity for some entrepreneurs. Josh Bittner reports in our cover story.
While Midwest farmers harvest row crops, there are autumn foragers who have found another wilder heartland bounty all it's cracked up to be.
Black walnuts are really known now as a superfood. They're getting a lot of attention because of the nutritional value.
Brian Hammonds is the third-generation president and CEO of Hammonds Black Walnuts. His family business has grown and diversified over 7 decades to become the sole company of its kind in the nation. Not to be confused with California's orchard-grown English variety, black walnut trees are native to North America.
Black walnut has a very wild, bold, rich flavor. It's very distinctive. More protein than any other tree nuts. Also a high degree of omega-3 fatty acids, polyunsaturated fats, no cholesterol.
Hammonds holds 280 acres with over 5,000 black walnut trees in their portfolio. And though the plant is renowned for its disease resistance, an important component in any commercial production, its alternate varying fruit cycle hampers consistent yields. So every October 1st, roughly 230 hulling stations in 15 states begin redeeming hand-harvested urban and rural black walnuts for about 5 weeks. Prices fluctuate, but in recent years, hullers have been able to offer a record high 15 to 16 cents per pound, and collective harvests can average around 25 million pounds.
These are looking really pretty good right over here. It's going to be really nice.
Once hulled and bagged, nuts are shipped to Hammond's headquarters in Stockton, Missouri. Situated at the edge of the Ozarks, the town draws thousands to its annual Black Walnut Festival.
It takes a lot to develop all of the network of buying operations to bring in the wild crop, and then to process the nuts to be sure that we're producing a product that consumers know is safe and is top quality.
The walnuts are cracked in Hammond's sophisticated shelling plant, where infrared light and human inspectors sort product. The company keeps a year's worth of inventory on site in cold storage or in caves underneath nearby Springfield. In addition to nut meat, consumed raw or in culinary dishes, and pressed to produce oil and flour, ground-up shells are sold for oil filtration, sports turf, and industrial abrasives, which have been used to blast clean battleships and the Statue of Liberty. Also, the hull encasing the shell can be used as fertilizer, ink, and a dietary extract. Academia is deeply rooted in the region's commercial tree crops as well. Over a century ago, the Show Me State was a top fruit producer. To this day, Missouri State University's Fruit Experiment Station in Mountain Grove continues with research and educational outreach.
When I use the term fruit, I refer to nuts, major seeds, most things that comes off of trees. So yeah, black walnut is considered a fruit in that regard.
Assistant Professor Michael Gornt implements agroforestry, the process of incorporating agriculture into an orchard-like setting. Branching out at Jernigan Ranch, a 3,300-acre working cattle farm gifted to Missouri State a decade ago by philanthropist rancher Leo Jernigan, the school is cultivating silvopasture, which integrates forest management, forage, and livestock.
Kind of a traditional mantra for a lot of foresters when it comes to grazing is to tell landowners not to graze in the forest, but grazing in the timber in this part of the country is something that's going to happen, and it happens a lot. So do we want it to happen any old way, or do we want to come up with a better way of doing it that will be sustainable and actually get dual benefit out of the process?
Gornt and ranch manager Marty Lewick are adding more black walnut trees, which, among other things, provide shade for cattle rotationally grazing across the landscape.
We're the largest purebred Hereford herd in the state of Missouri, and then one of the 15th largest in the United States.
There we go. You see how much more kernel is in there.
Like Missouri State, the University of Missouri also is pushing the boundaries of black walnut production through improved variety cultivars, which produce a more reliable, higher quality crop.
A lot of people pick up regular, ordinary black walnuts and sell them to local hullers, but the price can be anywhere from 9 to maybe 15 cents a pound. But for the improved walnuts, I can get up to 90, 92 cents a pound.
Andy Thomas is an assistant professor at Mizzou's Southwest Research Center in Mount Vernon. The 900-acre site represents various soil types found on the Ozark Plateau. Consulting with Hammonds, whose current production model is based on a 99% wild crop, Thomas has joined hobbyists and landowners who have derived over 100 black walnut varieties through selective breeding. Thinner shells and more nut meat maximizes value per acre, and Thomas touts one hardy strain, Sparrow.
They're by far the best walnut that I would recommend for farmers to produce for several reasons. The main reason is that they produce year after year very reliably, where a lot of walnut varieties produce every other year.
USDA keeps statistics on almond, pecan, and pistachio production, but the federal agency doesn't furnish numbers for black walnuts. Hammonds officials believe the industry reaps over $5 million annually. But for the boss, there's more to it than just hauling in the specialty crop and refining it for sale.
It's the people that are involved in this whole process that really makes it worthwhile. Folks who pick up black walnuts, folks that make black walnuts part of their lives. It's a natural, wonderful product, and we're excited to be a part of it and looking forward to what the future may hold down the road.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
We are producing this episode ahead of Thanksgiving to allow our production staff a chance to enjoy the holiday with family and friends. For the shortened week, March wheat increased 8 cents while the nearby corn contract dropped a nickel. Limited sales to China helped keep the soy complex in 2-month lows as the January contract fell another 15 cents. January meal declined $5 per ton. March cotton improved 96 cents per hundredweight. Over in the dairy parlor, December Class 3 milk futures expanded 52 cents. The livestock sector was mixed. The February cattle contract rose $2.85 and January feeders jumped $4.05. The February lean hog contract dropped 50 cents. In the currency markets, the U.S. dollar index gained 14 ticks. January crude oil expanded 7 cents per barrel. COMEX gold fell $10 per ounce, and the Goldman Sachs commodity index declined nearly 2 points to finish at $419.50. Joining us now to offer insight on these and other trends is regular market analyst Elaine Kub. Elaine, welcome back.
Happy Thanksgiving.
Happy Thanksgiving, Elaine. And in the spirit of Thanksgiving themed, I wanted to ask you, what do you think that producers have to be thankful for this year when they look at the commodity markets?
Well, I mean, if they are done with harvest, they can be thankful that they're done with harvest eventually, and the folks who aren't yet done with harvest can be thankful that someday they will be. I mean, eventually this will end. Eventually 2019 will be over, and in fact, it's only like 5-6 weeks from now that we'll be in 2020.
That indeed, but I think one of the markets that has been probably happy with the way that the markets have been trading is the wheat market. We had another big trading session on Monday. Why do they continue to see such strength right now?
Well, it's the cash market that's leading it. It's the actual physical fundamentals of people needing that SRW variety of wheat, the soft red winter wheat. That's where we're seeing these incredibly strong basis values, like along the Illinois River. I mean, it's kind of all over the map, but anywhere from 20 over to 35 over and 10 over in Ohio. So it's the cash market that we're seeing people really needing to get that variety of wheat. You've already got Chicago, the futures markets already inverted from the July timeframe. So, you know, it's really strong. That market is screaming for it, but we're really not seeing the futures responding very much to those bullish signals. You've still got a futures price of about 530, right? I mean, big deal. Compared to how bullish those cash market signals are, the futures market isn't really responding.
And is it just because of the global wheat supply that we continue to sit on?
Well, that seems to be it, is that there must be draw from people who could otherwise have been going to Russia or Europe. But it's complex and it's confounding to not see the same reaction in the hard wheat varieties, because there you've got a bullish story from Australia. They still have this very widespread drought, and so there's concern, you know, 6 months down the line that Australia won't be much of a wheat market, and yet we don't really see any response from that in the Kansas City or the Minneapolis wheat markets.
Elaine, turning to look at the corn markets this week, as we mentioned there earlier in the program, we've seen a lot of inclement weather for folks trying to travel, but that also has an effect, of course, on harvest. Is the corn market factoring any of this weather storms that are coming this way into the market, and if not, why?
Well, the futures market doesn't seem to me, but again, and this will sound like a broken record, but the cash market is reflecting the fundamental bullishness of these supply problems. So the latest crop progress report said that 70% of North Dakota's corn wasn't even harvested yet. Nationwide, this all calculates to, you know, approximately over 2 billion bushels of corn that still wasn't harvested as of last weekend. And a lot of that will have been harvested in these few nice days that folks have had, but a lot of it won't, because in North Dakota, for instance, folks might be waiting for the ground to actually freeze before they can get to the really wet areas. So a lot of this is still going to be waiting, and by the time the USDA goes and resurveys people in the first 2 weeks of December, there's still going to be unharvested grain that we won't have yield numbers for, and there still will be incredible uncertainty about what is actually there.
And we've been focusing so much of our attention on the U.S. corn crop. We haven't been really paying as much attention about what's going on in South America. It sounds like they're gearing up here for a really large corn harvest. How will that put a cap in the corn rally here domestically?
I think it is related. We did see the Brazilian currency reach a fresh 20-year low on Tuesday. It has collapsed. It's about 4.25 Brazilian reais per U.S. dollar. So that is typically associated with bearishness in the soybean market, but you're right, to the extent that South America, Brazil, and Argentina are going to be coming onto the global corn export market too, that weak currency from Brazil puts them in a good position there to not only be planting as much as they obviously can this fall, and to be putting in as much inputs as they can and really boost yields as well as they can this year. It adds bearishness to the global corn prices too.
And Elaine, switching tracks to talk about the soybean prices, as we just said there, they lost 15 cents compared to last week. We're still at that subpar or sub $9 level. What's your new area of support for the January soybean contract?
I don't think that there's necessarily a chart level that I'm looking at. I think it just continues day by day when you see that Brazilian currency movement. I think that has been the #1 mover for soybeans this week. There are some supportive bits of news. You know, you have bullishness in the edible oils market. The Malaysian palm oil market has continued to be strong. You see noise about some sort of trade agreement reaching its final throes here. Who knows what that means or what the timeline would be on that, but there is some potential for soybeans to be supported, but not as long as that Brazilian story continues to be bearish.
And Elaine, we obviously know that corn is still continuing to be harvested, especially up there in the Dakota areas, but soybean harvest is pretty much wrapped up for the year. Do you think that there's the possibility we're still going to see some sort of post-harvest rally, or is really any sort of, you know, weather or condition problem in the soybean market already factored in?
If we were in a scenario where the speculators were caring about harvest headlines, if we were in an area where that kind of fundamental news was boosting the markets, then there would still be an argument for soybeans to go up too, because it's not just North Dakota. It was Illinois and Missouri also that had soybean acres left unharvested, and you're talking about that math works out to something like 200 million bushels of soybeans that were still unharvested as of last weekend. So there's still certainly fundamental bullishness about soybean harvest. I think we're just in a scenario where the futures markets are not responding to reality, let's say, out in the cash markets.
So Elaine, we talked about wheat, corn, and soybeans now. So I've got a question I think that sums up the grain markets nicely, looking again into that 2020 lens, if you will. We've got a question from Scott in Wisconsin, wanting to know, which commodity do you believe is the most undervalued and has the most upside potential in 2020?
Sorry that you set that up as a grains question, but he asked for commodities in general. I'm going to go for feeder cattle, actually.
Okay.
When you look at the price relationship between them and the fat cattle, there is some bullishness there, and certainly just the bullishness of feeding that market right now because of the grain, the cheap feed that is available. The corn that's being harvested right now, there's a lot of low test weight corn, a lot of wet corn, so there's a lot of potential for folks to go into the market and buy damaged corn, buy sample grade corn, buy number 4 corn, where you can get a lot of discounts on that, and it still feeds well. The feed value is still there, the nutrients are still there in the matter. So I think there's opportunities for folks in the cattle feeding business to be making money just on a feed arbitrage.
And so feeder cattle aside, what about the live cattle market? Are you as bullish about that market heading into 2020?
I'm not as bullish on that in the near term just because I feel like they've already had their recovery, but I do think that the strength will remain in there. We saw cash prices this week at $117 live basis, which is about $1 higher than last week. So the strength is still there. The packers are still making a lot of money, somewhere in the range of $500 a head. So that is still there for them to pass that along down the line to the feeders that are coming to the market, and I think the strength will remain, but I'm not super bullish in the near term.
Well, and we saw that the April live cattle contract finished on Monday, the highest point at 125, I think, which was the highest in 7 months. Do you think that they can stay sustained at that level? You said you did, but how long do you think they can stay at those levels?
Yeah, when you've got that April contract at 126, it does start to make you think of locking in a price there, because if you just think historically, where do live cattle, what's a price level where they tend to roam around, it tends to be about 120. So to see that April contract at 126, I think there is potential for that to pull back between now and spring. So if you've got those calves and you've got the cheap feed or cheap feed opportunities you can look forward to after this terrible harvest, I think it's a good idea to be looking at locking in some of those April prices.
Elaine, final question. As you look at the cattle complex this week, they were all over the board. Was it just because of the aftermath of the cattle on feed report and those large estimates by traders?
It could have been that. Traditionally, in a week like this, you think it's just low volume and you get streaky trade anytime there's low volume. But you're right that the cattle on feed report was a lot for people to chew over, and it wasn't necessarily bearish. We knew that these large numbers were going to be coming in after the light September report, and then you have to sort of calculate out all these 800 pounders or 900 pounders that did come in October. What time frame are they going to be hitting the actual slaughter market? So I think there was a lot for traders, and there could have been some of that coming in. What volume you did see that ended up being streaky prices.
And Elaine, we finally got to talk about what's going on in the hog market. Is it time for them to put in a seasonal cash low?
Not necessarily. I mean, you think this Thanksgiving was coming up here, right? And nobody likes turkey. I mean, I hate to say it. Do you like turkey?
Well, okay, so I read a statistic that said 88% of the average American households eat turkey on Thanksgiving. So I don't think it's a matter of if I like it. I think it's a traditional staple, so you eat it.
But I think more and more families also have ham. We saw that in the past couple of weeks. We saw really hot ham prices, and that was holding up that pork cutout. Ham prices like $95 a hundredweight. So that translates. I bought some ham today at Costco, and it was more like $3 or $4 a pound at the retail level. But I think that's what's been holding up any sort of support there has been for the lean hog contracts right now, has been that cutout value. But I think that moment has passed. Seasonally, that Thanksgiving push for ham has certainly passed. So that last bit of bullish support for the lean hog futures contracts, I think, has now passed away, and I don't necessarily think that we'll find support here at these levels.
So with that being said, Elaine, where do we head from here?
You know, in these two closest futures contracts, they've gone down about 7% through the month of November. Could they fall below 70? Absolutely. I think that there's no magic number that folks are going to step in and support that.
Elaine, I want to turn our attention to one thing we didn't get to mention during today's program, and that's what's going on in the biofuel industry. The EPA said they are not going to release the biofuel mandates until after Thanksgiving. We don't know when that's going to be, but is that going to have any impact, do you see here, short-term or long-term, for ethanol or biofuels?
I suppose it depends on what they release, but we did see ethanol futures really pop on Tuesday this week, Monday or Tuesday. So obviously the market is anticipating a bullish boost from that.
All right. Elaine, We've got Thanksgiving here. I wanted to ask, what is your favorite Thanksgiving food before we wrap up today's show?
Brussels sprouts.
That's an interesting one. Not a traditional Thanksgiving food, but...
No, and I should back up what I said about turkey. Obviously we love the turkey industry and the soybean meal that they consume.
Them.
And yeah, folks love that too.
Elaine Kub, thank you so much.
Thanks, Delaney.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. Also on our site are links to our YouTube page, so you can see all of the videos we produce in one location, or just search youtube.com/markettomarket. Join us again next week when we head east in search of farmland. So until then, thanks for watching. I'm Delaney Howell. Happy Thanksgiving and have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing. Store now, profit later.